All right, so let's go back now to markets analyst Ricus Reeders, who's a wealth manager at PSG. So Ricus, just before we lost you on the line there, we were talking a little bit about this recovery that seems to have been led by tech giants.
That's right. It is the one sector that has benefited from the lockdown because people spend more time online, and whether that be entertainment or ordering stuff online, they've obviously had a benefit. And one must never forget that these tech companies don't only have customers in America, they have customers worldwide. So even though America is doing not that well in containing the outbreak, their customer countries, whether it be Europe or elsewhere, are doing a better job, and as a result, demand from those countries have a better chance of recovery, and it's no wonder that that sector has led the market.
And then Chinese stocks seems to have bounced as well, and I just wonder how that's affected emerging markets.
It has to a certain extent. It's an interesting story. About 5 or 6 days ago, Chinese state media suggested that people should invest in the market. And about 2 days ago, they said, hang five. We think it's getting a bit overdone at the moment, which is why we've had quite a pullback in the Chinese stock market over the past day or two. But that's a short-term story. I think the bigger picture is taking a look at things like iron and copper demand, of which China is a big customer, and that has picked up and held up very well. So the sense that the Chinese economy is recovering from this crisis has put a little bit of a positive spin on other emerging markets.
All right, so look, again, this COVID-19 scenario, the United States, we're starting to see again a rise in the numbers, particularly in the southern states, and I'm seeing the markets there shifting again in the other direction. So I suppose much of our movement is going to be related to the news that does come out of places like America.
Completely and utterly. I think what we've seen specifically in the American market, about a month ago, specifically your public, your smaller investors were taking bets on sectors that have fallen the most, whether it be, for example, tourism or airlines, the kind of things. They were betting on a recovery. What has happened with the increase in the global rate of infection is that there's a turn away from taking that bet back to the safer places, like, for example, tech or even to a certain extent financial shares. But you're dead right. The short-term oscillations is totally news dependent, and what is happening on a day-to-day basis as this pandemic wanes and ebbs.
What about our JSE? It's a week now. When you look back and track the movements, what's the story telling us? Well,
if you just take a look at the indices, that's looking okay, but unfortunately it's been led by two sectors, mining and the tech sector. And the tech sector is effectively non-fashion process. So that takes care of your industrial side of things. It's been led by those two heavyweight companies. And on the other side, the mining side, as I've just spoken about what's happening with copper and iron prices, there is a feeling that kind of company will come through this crisis with reasonable balance sheets and reasonable cash flows. Financials, which is possibly a better indicator of what's happening locally and with local companies, in other words, companies that do their business in South Africa, has had a horrid time, and so has the rest of the sectors, whether it be tourism or manufacturing. So it's a bit disingenuous to take a look at the All Share Index, for example, and say we're actually doing well. We are not. It's a few very specific companies that have driven the numbers higher.
All right, Ricus Reeders, we can talk for quite a while, but unfortunately time is not on our side. But thanks so much indeed for giving us some insights, even though the chat was short. But thanks so much for your time.
It's a pleasure, Peter.
All right, that was Ricus Reeders, who's a wealth manager at PSG, talking to us about our markets, global markets, and what the situation's looking like. All right, stay with us. We'll have more for you coming up shortly.